2024 was the end of triage, right? We had 10 years of all-time low rates where business was relatively easy. Things just continued to be worth more as rates continued to decline. Post-COVID and post-interest rate hikes, everything collapsed. And 2024 was kind of the end of that triage and the beginning of a new normal. I think what we're seeing is higher for longer. Our economy continues to be incredibly robust. That robust economy limits the Fed's ability to decline interest rates. And without declining interest rates, there's no easy button, there's no bailout, there's no ripcord for a lot of developers. You have to be creative, shrewd. Owners have to be operators. Hands-on asset management, weekly site visits, asking the right questions to the right people in order to create value and generate outsized returns. We saw a tremendous amount of capital that had been sitting on the sidelines come in, largely in the form of new origination, equity-like returns in a debt instrument, largely seeking high and mid-teens yields. We also saw first movers in terms of family offices and really sharp institutional capital start to come back into common equity investments in CRE, and that trend will continue in 2025. 2025 is going to finally be a true return to office year. The 5-day work week is back. We're going back to pre-COVID office levels. I think that's going to be incredibly valuable for our overall macroeconomy and particularly for commercial real estate. I think office dislocation is going to be really interesting to focus on in 2025. Now, we want to focus on the winners. The winners, the office buildings in great locations, in great markets with tremendous moats. Those winners are going to keep on winning. But some of those assets have capital structure dislocations that need to be resolved. And we see a lot of opportunity coming into those long-term winner assets and helping restructure their capital stack. The themes that we think are interesting continue to be categories like data centers, iOS, aviation, parking, senior housing, student housing, markets like Kansas City, Indianapolis, Pittsburgh. Those markets did not see the oversupply of a lot of their southeastern peers. And because of that lack of supply, the supply and demand fundamentals are highly favorable. In industrial, the market remains extraordinarily tight, particularly when you scrape out these really large logistics, Amazon-style boxes. With onshoring and manufacturing coming back to America, we have a lot of conviction that industrial will continue to be strong. The categories that we're extremely excited about for the upcoming year include aviation, include industrial, they include a lot of our micro neighborhoods. The Paseo South Gulch is an incredible live, work, play, stay, multi-dimensional project that's really just getting going. With the 2026 World Cup coming to Kansas City, our West Bottoms project is timed perfectly for delivery alongside that amazing event. In 2024, we're extremely proud to have launched our SRAI, SomeraRoad Aviation Infrastructure business. I've never seen better supply and demand fundamentals than in the private jet aviation hangar business. And we're going to continue growing that in 2025. The election's behind us, commercial real estate has bottomed, transaction volume is back, and capital is ready to be deployed. We're focusing on finding deals that work without leverage, without reduction in interest rates, without cap rate compression. Find those deals, identify outsized returns, and if you can add leverage to that that's accretive, well, good on you. SomeraRoad remains an entrepreneurial and opportunistic real estate platform. We can be creative, and we go wherever we see the best risk-adjusted returns. New opportunities, new strategies, new partners, taking capital that's been on the sideline, and getting it to work in the right deals. You got that one?